Good morning and welcome to another weekly general update for the 14th and 15th of January. The American index, the S&P 500, is still basically stuck in this triangle that it's been in for quite a few months now, and close to resistance at 1300, so we're still looking for some resolution of where that market goes. But just before we go and have a look at the charts, we'll have a quick summary. Is the normal general advice, important information. So the action for the week, the S&P finished 12 points higher, and as I said, the resistance at 1300 is still in play. The second half of January is typically a fairly seasonally weak period of time, but we've still got some reasonably good upward momentum in the index as a whole, and certainly in some individual stocks are on a real tear at the moment in the US. So there's a real conflict there between those two different forces. Now the US dollar effect, we'll have a look at that because for most of last year the US dollar and the S&P index went in exactly the opposite direction, almost precisely. But that's really broken down in the last, certainly in the last 2 weeks, but also probably through a part of December as well. So that's not, just in the very short term, is not as good a guide as it has been. The ASX rose 87 points, so we had a better week here, up 2%, which was good to see, but really overall we're still stuck in this rather frustrating sideways band. Gold rose last week by about $50, rose another $22 this week. I'm 50-50 whether gold has actually bottomed out yet in the mid-1500s. I still think another leg down to 1440 is still possible, although it's becoming less likely. And the reason for that is that it's not really that oversold yet, and quite often when markets have had a steep sell-off, they do go down and retest the lows, so I wouldn't be surprised to see gold go down a little bit further yet. Silver had another small rise on the week, but it's basically going to follow where the gold's going. Now this is the 10-year Italian bond yield, which I've been following very closely, so two key indicators for me that the Italian 10-year bond is below 7 and trending down, which this isn't. It's spent most of the last few months above 7 and certainly isn't tracking down at this stage. We did get a bit of relief in the last couple of days where the yield moved down. And the other key indicator for me is the value of the euro currency against the US dollar. And once we'd broken $1.31, that wasn't a good sign either. And that's now down about 126. We'll have a look at that shortly. So overall, before we get to the charts, the overall actions to take, gold, junior gold producers are still on the move in Australia and also in the US, so there's still momentum there. Stocks in general, for members, I'm now using 4 trade setup types, and I think over the next couple of weeks we're going to see quite a few opportunities building. So let's have a look now at the general charts. So we'll start first of all with the US dollar index, and this is that index on a weekly chart. So let me just pan back here. You can see we're in a very big picture downtrend. That's looking over the last 10 years. But coming into a time frame that's more relevant for our trading, you can see that we've moved through 2 Fibonacci retracement levels of this run here from June down to the bottom. So that's June 2010 down to the bottom in May. So we've moved through the 38.2, we've moved through the 50, we've now got the next level up here at 82.56. RSI not quite oversold, quite overbought yet. No apparent loss of momentum in the MACD. So I would expect the US dollar will probably push a bit higher, and if it breaks through this 82.56 level, then I'm looking at 88.65. Now the reason that that's important is because we've had such a close correlation between the US dollar and the US stock market and also commodities in terms of an inverse correlation. So if we look at here, this period here from this period here through September, late August, September was a period when the US dollar strengthened, and that was when the US stock market was falling sharply. The US stock market rallied also equally sharply in October, and the US dollar fell for those 4 weeks of October. We then saw the US stock market again down sharply through November, and the US dollar moved higher. Now that's where it's basically broken down. From this week here, from the start of December, the US dollar has tended to track higher, and the stock market has gone higher as well. So it'll be interesting to see how that plays out over the next few weeks. But if 82.56 does break, then there's going to be significant pressure on commodities and stock markets. Let's just have a quick look at the euro US dollar. $1.31 here is a key level for me. It's gone straight through it. It's now down, heading back down towards 126. We are approaching a bit of a support level here. We're not pretty close to it. I don't know whether that support level will hold or not, but yeah, just over 126 is a bit of a support level there. Let's have a look at the S&P index now. First of all, on a weekly chart. So you can see here on the weekly chart, we've got this big picture triangle that's been in play now. We're just stuck up under this 1300 level. So we really need to see resolution of that. RSI not particularly overbought, so there's no reason why the US market can't move higher from a purely technical point of view. So the next couple of weeks will give us a lot of important information. Let's have a look at gold. And we'll just look at gold on a daily chart, on a weekly chart, because that's the more relevant. You can see here we've got long-term uptrend. We've been looking at this now for quite a long period of time. We did have a bit of a dip below that trend line, but didn't close below it, and the last 2 weeks have moved up again quite solidly. The RSI got down to a relatively low level. It got down to, didn't quite get down to the levels of 2008, but as you can see, we do have a big picture retracement level at 1446. So one more retest of the lows down to 1446 is possible. I'd probably rate it 50-50 at this stage. Next chart is silver on a weekly chart. You can see it's in a downtrend. You look at the MACD, it is showing some signs of turning. Certainly the downward momentum seems to be slackening off. So we may have seen the bottom on silver. Let's have a look at this, the Aussie market. Again, just really looking on a weekly chart basis. It's panned back. You can see it's been the market really has had a bit of a downward bias since we peaked out in April of 2010, but you know, basically over the last 3 or 4 months, you can see it's just really gone sideways and done absolutely nothing. So there's just a trading band there between 38.50 and about 43.50, 4400 at the moment. Now the other thing that I wanted to take a look at, in keeping with the amended style of analysis that I'm doing, that members are seeing quite a lot of now, I just want to reinforce that point. I want to take a look at a stock called Flight Centre. So we'll start first of all by looking at Flight Centre on a weekly chart. And you can see this is the period from the bottom of the crash, so March of 2009, when the market started moving higher. Let's just put a big picture Fibonacci structure on this, and you can see that we had a We had a 38.2% level at 1682. The price went slightly below that, but appeared to have formed a double bottom down here on the weekly chart. Now let's have a look at what else we can see here. We've got a little bit of divergence happening on the money flow index. You can see we formed an equal low, yet the money flow index had started to move higher. You can see the MACD definitely started to turn a week ago, so that was in this week of the 6th of January. You can see that we've got divergence on the RSI. The RSI was down at 30 when we got this first leg down. We then formed another leg down, but the RSI had moved higher. We were also reasonably extended below this moving average zone, and so a movement back into that zone really did make sense. So we had an opportunity from around about 1650 to trade to 1850 or maybe $19, which is a pretty good trade. Let's have a look now at our daily chart, and you can see that on the daily chart, so we'll zero in on where the 6th of January, so we're looking in these 4 or 5 candles just through here, and you can see that the MACD index, look at these little bars shortening up, meaning these two lines are starting to come together during that period. So around about the 4th and 5th of January, there was certainly some good indication. The RSI, we had divergence. We formed a low here, and the RSI had started to move higher. We also got divergence on the money flow index, more obvious on a daily. You look at this this first little low here, which was in November at about $18. We formed quite a low on the money flow index. We then dropped considerably in price down to $16.20, and the money flow index had moved a bit higher. So clear divergence. We were able to gain entry somewhere around about the 1680 mark, and you can see in the ensuing 4 or 5 days from there we've had a very strong move and closed the week just shy of $18. So that's been an outstanding trade, and that's one of the trade setups that I'm identifying now, and we've got 3 other trade setup types as well. So that's it for this week. We'll talk again next weekend. Cheers.